Welcome everybody. Glad to be here with you today. Got a brief but great presentation for you. I've only got about 10 slides or so, and then we'll spend the rest of the time on our live charts showing you this setup. So let's get started. So a bit about us here at tradingwins.com. Just before we get into it, we are a group of pro traders with well over 30 years of experience. We're real traders and teachers. And we've been creating our own strategies and trading systems for many, many years and teaching people around the globe from complete beginners to experts. So, again, I'm Vince Vora, tradingwins.com, and today I'm going to be sharing with you the same money management rules that myself and the other traders here at Trading Wins use on a daily basis. And I'm also going to tell you exactly what you're going to need to trade this system. I'm going to show you the actual setup. Okay, we're going to spend plenty of time on our charts showing you several examples. And then when we get to this part of the presentation, I'm going to ask that you type in a symbol, a favorite symbol of yours, whether it's a trade you're thinking of getting into or a symbol you trade on a regular basis, whatever you like. You can type it in at that point, and I'll analyze the chart with you and show you how this setup would have worked with that particular symbol. Okay, and time permitting, we will leave, or hopefully we'll get to as many questions as possible. Before we get into it, just a couple of poll questions so I know exactly who my audience is and I can tailor the examples specific to you. Which market do you trade most? Is it stocks, options, futures, or Forex? If you can just take a few seconds and type that in, I'd really appreciate it. And I'll try to give you as many examples as I can. Great, thank you so much. Okay, we've got plenty of, wow, it looks like a lot of futures traders here today, but also stocks and options, plenty of options. Okay, excellent. One last poll question. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active, 51 to 100, 100 plus? Again, please take a few seconds to type that in. Wow, 200 plus, 100 plus, excellent. Okay. Excellent. Thank you so much, everybody. Appreciate the participation. Let's get into this. Always remember, trading can be extremely risky if you don't know what you're doing. So please educate yourself and never trade with money you can't afford to lose. Okay, now always prepare yourself before trading with real money. Now, speaking of money, myself and the other traders here for many years have been using these rules. We live by them daily and they have served us very well. Number one, again, do not trade with money you can't afford to lose. I'm sure you've heard that many, many times, but it is worth repeating. It is so true. And the real key here is to trade with an amount that is small enough that it feels completely insignificant to you. Okay. The reason being is it is so much more important how you manage a trade once you're in it than it is selecting an entry point. Okay. So for some of you, it'll be a couple $100, for others several thousand, but the point is it needs to feel completely insignificant to you. You need to, once you're in the trade, remain calm and be able to follow your rules, and the only way you're going to do that is if you're not worried about the amount of money you have in there. Okay. Also, never risk more than 5% of your account balance in any one trade. This will limit your risk considerably. Also, never have more than 50% of your account balance active in the market at any one time. And there's two reasons for this. Number one, there are so many factors when it comes to the markets that are completely out of our control. Okay? Any major news announcement or catastrophic event can really drive the markets against us, and it can happen overnight, you know, completely out of our control. So one reason for this rule is to limit your risk. The other is so that should you sustain such a loss, you then have half your money sitting there available for you to go back in and trade and make that loss back. And with what I'm going to show you today, it really won't take you long. I'll explain. Also, never place more than 2 trades per day. Now, that's if you trade on a daily time frame. Again, many of the examples I'll be showing you are on daily charts, but this will work on any time frame. But the real reason for this is to be selective. You will have many setups, many triggers with this setup, and you want to select the best of the best. I'm also going to talk a bit about how you could differentiate the weaker ones from the stronger ones. But you want to be selective and pick your 1 or 2 best trades a night. Okay, a couple other rules that we live by or sayings, and this one I want you to write down and walk away with. You will never go broke taking profits. Okay, especially if you're just starting out. I really want you to live by this. As you become more and more experienced in the markets, you will learn how to stay in a trade and squeeze out every bit of profit you can. But especially at the beginning, when you're just starting out, you will never go broke if you're taking profits. I want to get you used to taking those profits. Also remember, this is not about whether you're right or wrong. That's important. But it's all about how much money you make when you're right versus how much money you make when you're wrong. Okay? So what will you need to trade this system? One, just about any charting platform will do. Okay? You don't need any sophisticated, expensive charting platform. Any of the free platforms out there are good enough. Reason being is the only indicator you will be plotting on your chart will be the 20-period simple moving average. And this is more of a visual aid than anything, but I'll explain once I bring up my charting platform. So there is no need to spend money on new hardware or complicated charting software. If you're watching this webinar, you already have everything you need. Okay? Sorry, someone just said they're having trouble hearing me. I just want to make sure everyone can hear me. Can you type a Y or a yes in the chat box if you can hear me? Okay, great. Thank you. So a few benefits of this system. Number one, it will work on any market. Stock, options, futures, Forex, globally, any time frame, any price level. I'm going to show you examples of each. Also, you don't need a lot of experience to trade this. You will see just how easy it is to spot this setup on a chart. And it has very, very clear entry and exit points, okay? And it can be used as a standalone trading strategy or as a great complement to whatever you're already using, okay? Bit of background on the strategy. When we first sat down to create this many, many years ago, there were 5 things that we considered a must with this strategy. Number one, it had to be simple to spot on a chart, and I'll show you just how simple it is. It had to be able to be used with any charting platform, and it can. Had to be easy enough for any trader, regardless of level of experience, to use. And more importantly, had to have extremely low risk, and I'll cover that in detail. But most importantly, it had to be consistently profitable. So for many, many years, we have back-tested this, forward-tested it with real money, and we continue to trade this on a daily basis. It is very consistent. The only 2 components of this strategy is, number one, the 20-period simple moving average. We have had, or we have tested this with exponential and weighted moving averages as well. But in the end, we found that the 20-period simple moving average works best. Also, we're going to be looking for an engulfing candlestick pattern. Now, not the traditional way. It's a little different, but I will show you. I think George is asking, this is for day trading. It can be used with any time frame. Okay, I'll show you examples of each as we go through this. Now, for those of you just starting out, a simple moving average, okay, is calculated by adding the closing price of the security for a number of time periods and then dividing this total by the number of time periods, just a straight average. And an engulfing pattern is actually a reversal pattern. It can be bearish or bullish, depending on whether it appears at the end of the downtrend, which would be bullish, or at the end of an uptrend, which would be bearish. Okay. Now, rather than show you off this picture here that might be difficult to see, I'm going to bring up my live charts now, and I'm going to walk you through this, okay? Give me a second to switch over. Okay, great. Hopefully you can see my chart now. Excellent. Okay, so every time you bring up a chart, there's a couple things that I want you to look for before the actual setup, and that is the momentum. Now, how do we spot these? We're obviously in an uptrend here, moving up nicely, and the way I want you to think of this is the slope, and you can measure this by the bar, okay, or by the moving average. And this is where I consider that we use the visual aid. This is what I'm talking about. So let me explain. I'm going to draw something out for you here. You have slight momentum in your favor, which is a slight slower, significant momentum, or you can have very significant momentum. The higher that slope, and you can read it again by the bars, okay, or the moving average, the better. The more momentum is in your favor. That's like having your back, and it's pushing you forward, okay. And the same works in a move lower. You can have slight momentum lower, you can have more momentum lower, or you can have very significant momentum lower. The more significant slope, the better. Okay. Now, the reason why we use the 20, okay, rather than just looking at the bars, is because we get a back, okay, or a retracement. If we're measuring just candles or the bars, we mistake that for momentum lower, okay. But you can, in this example, the 20-period moving average remains in a significant sphere, okay. So that helps you recognize the fact that this is merely a retracement, not a downtrend, or not momentum lower. It's just a pullback. And in this here, you're going to be looking for a reversal signal, telling us that this is over and that the momentum higher is going to continue. Okay, so this is the setup for a long trade. You're going to be looking for momentum higher, and the significant that slope, the better. You're then going to be looking for a pullback. It can be a consolidation sideways, or it can be a pullback. The key is that the 20-period moving average remains or maintains its slope. I see a number of people saying this is a flag. You can interpret it that way. You can even use it that way. Okay, but what we're looking for in this point here, once you get that pullback, okay, is a reversal pattern. So whether you're using a flag or the engulfing pattern that I'm going to show you, either way, it'll work. Let me show you what we're talking about here. So you're going to have, for an engulfing setup, a engulfing setup, you're going to have a setup that looks like this. Now there's a difference between the setup and the actual trigger that gets you in the trade. Right now I'm only referring to the setup. And for the setup, you ignore the wicks or the tails of the candlesticks. Okay, you only look at the bodies of the candle. Only the difference between the high and low, not the open and close, not the high and low. So an engulfing pattern is a much larger body here that fully engulfs the body of the previous candle. Okay, now it could be at exactly the same level on one end. Okay, but this prior candle here must not exceed the open or close of this candle. Okay, so once we see that, that tells us that this retracement is over and that this move, this uptrend, is going to continue moving higher. Okay, so that is the setup you want to look for a long trade. For a short trade, it's the exact opposite. You want to look for momentum lower, then a pullback or a consolidation sideways, and it's at that point that you want to spot your bearish engulfing pattern. Now, the bullish engulfing pattern and the bearish look exactly the same. Okay? You have the current bar, the body of the current bar will completely engulf the body of the previous bar. That again is your reversal signal telling you that that consolidation or that pullback is over and that our downtrend is going to continue. Okay? So those are the setups. Now what is the trigger? The trigger for the long trade, it would be a trade above the absolute high of the engulfing bar, so including the wicks or the tails, okay? The absolute high. Once you get a trade above the absolute high, that triggers you in the trade, and your stop loss would go just below the absolute low of that engulfing candle. That way you're only ever risking the range of that one candle. That's what keeps the risk of the setup very low. Let me show you an example here on the Qs. So right here, this is what we were talking about before, measuring the slope in the candles, okay, or the moving average. Both are significant here. We get a pullback, and it's right somewhere in this area that we want to spot our reversal signal. And it happens right here. I'll zoom in a moment for you so you can see it. If my indicator would work, there we go. So let me zoom in here for you. So here it is. You have this strong momentum higher, you have this pullback or consolidation. You can draw it many ways, but you can see that the underline here just took a break, okay, from its up move. And then you're looking for that reversal signal, which is right here. You see the green candle? The body of the green candle completely engulfs that very small body of the previous candle. You can see that the wick actually extends beyond the high and low of the engulfing bar, but that doesn't matter. For the setup, it's just the bodies that matter. Now, to trigger you in the trade, you actually need a trade above the absolute high of the engulfing bar here, okay, above the high, which does not happen on the next day, but happens on the day after. All right, and that's all I would give it. I would only give it 2 candles. If it hasn't triggered by the close of the second candle, regardless of what time frame you're trading, then I would give up on it, only because the momentum was obviously not as strong as you initially thought. Okay, and a real nice benefit of this setup is that most trades, as I go through my example, my examples, you're going to see that most trades that trigger tend to move in your direction immediately. And for all you option traders out there, you know exactly how important that is to you. Because when you're trading options, if you get into a position and it pulls back on you initially, that loss in premium, okay, for you to make up that loss in premium, you're going to need a much stronger move to the upside to make that back and gain a profit. But when it goes in your favor immediately, you're automatically in profit, and it's a great not only for your option trades, but even for your confidence as a trader, and for you to manage that trade. Just makes it much, much easier. So let me show you a couple of examples for short trades. Okay, everything is the same except it's reversed. So initially, when you're looking at your chart, you bring it up. What are you looking for? You're looking for trend and momentum. Okay, how do you judge it? By the slope. So you can see here the slope, but if you measure the bars, it's even more significant, right? And you get this nice pullback here, all right? And then it's right in this area, and I'm going to zoom in here, okay? Remember, when I zoom in, we lose a bit of the slope, but it's right here. Look at this strong bearish engulfing bar. The body of this completely engulfs the smaller body of this, okay? Now, I want to show you this example for a reason. Remember what I said, to get you in a trade, you need to trade, in this case, just below the low of the engulfing is your entry. But where does your stop go? It goes the opposite in candles, so you're only risking the range of the one candle. So if you come across setups such as this, where the bar has such a wide range, then that is for you, okay? And so you want to skip that trade. If it's too much risk for you, skip. Remember, there's going to be plenty of steps. And the other thing I want to show you, the reason I'm using CA as an example here, is because whenever you get a sustained trend in one direction, be it up or down, you take entries along that one stretch. So when you come across one that is too much risk, sit and wait it out. You'll typically get another one. And here's one about later. We got another one. But you can see the difference between the range of this bar compared to that one, much smaller. So the risk here is very, very small. Okay? You have momentum in your favor. You go back, 2-bar pullback. You get this bearish engulfing bar, then you wait for just one tick below the low of that. That would get you in short, and your stop will go above it. Okay? Now, what if it trades above the high? In that case, the trade is negated or disqualified. Okay? A very simple you want to follow. It will save you over the because what that means is most trades that go in your favor won't even be losses. They'll just be negated or disqualified, etc. Okay? Works the same way on long trades. Let's go over this example alongside. So what are we looking for? We're looking for trend and momentum. We're looking for a pullback, and then we're looking for a reversal form of a bullish engulfing pattern, which we see here. We wait for a trade above the high, then our stop goes just below the low. In this case, if I traded below first, it would have been disqualified, but it did not. It traded above the high first. What happens? Boom, goes in our favor immediately. Okay? That's exactly what you see. It's a class trade to the upside. Here's BITA, BITA. And looking for trend and momentum. Okay? There's that reversal. Remember, during a sustained trend, you typically get more than one opportunity. Look at what happens. Once it triggers you in, moves in your favor. Triggers you in, boom. Okay? Explodes. Very consistently safe. Why? The risk, very, very low. You're risking the range of the one bar. Okay? You judge that by the range of that. You can see too much risk for you, skip it. There'll be many other trades to choose from. Okay? One of the gap open the next day, gap above. Remember, it's fine to go in, but you have to reassess the risk, because your stop would still go below the low of the engulfing bar. So if you gap up here and you're putting your stop way down here, that might be way too much risk for you. Okay? Starting to get tight on time, let me run through a few more examples. Here's SUV. This is a classic chart. This chart you want to see a nice, steady, slow grind in one direction. And here you have momentum higher. You have a nice pullback. Okay? And then it's been here. You get that reversal signal in the form of a bullish engulfing pattern. What happens? Boom, in your favor. Beautiful trade. Classic. Here's Nike. A couple more. Here's again a sustained trend. You get 3 more setups. What happens each time? Moves immediately. Now, before I show you some futures in Forex example, I want to show you Visa because not only here's another trade side, okay, worked out beautifully, but here's a perfect qualified trade, and I'm going to zoom in for you. So in this situation, significant momentum to the downside. It was even more significant based on the gap if we measure the actual drop in candles. Then we get the move higher, or sorry, the retracement. And here you get a full bearish engulfing pattern. So what we were looking for here was a trade below the low of the engulfing bar here, okay, to get us in, but it broke above the high first. That's fine, okay? That will save you from getting stopped out many, many times. So you really want to follow that rule. Now let me show you a few futures examples. I saw many people here that trade futures. Here's gold. If you look to the far left, again, what are we looking for? Trend and momentum in our favor, judged by that slope. All right, you get a nice sideways consolidation. There is your bearish engulfing, or sorry, bullish engulfing setup. And let me zoom in here for you so you can see it clearly. There it is. Breaks above the high first, you get long, you put your stop just below the low, and off it goes. Huge trade in gold there. And if I zoom back out, here's a classic short example. Okay? Again, it doesn't have to be a strong pullback. And the pullback, it doesn't have to get all the way back to the moving average. It can even go beyond. What's important is that the slope is maintained. Okay? Because if it goes way beyond the 20 here, if the pullback is exaggerated, then that moving average will start to turn, okay, and flatten out. And that's when you know you've lost momentum and you want to skip those trades, okay? Larry, yes, it is the 20-period moving average, correct. Here's a chart of crude oil, and we all know what a move has taken place lately in crude. Now, could you have caught this move, or what part would you have caught with this setup? Here we go. For a while, crude was consistently above the $100 mark, kind of trending sideways back and forth. And then suddenly we get this strong move to the downside here, okay? We start getting momentum lower. So what are we looking for? We're looking for a retracement or a consolidation and that bearish engulfing setup. And here it is, right here. I'm going to zoom in for you on this move. Okay? So there it is. And look how small the range of that bar is. So the risk on that trade was so small. Yet, look at how it turned out. Okay? And actually, there is a way with the exit system that we use for this, the exit strategy, you would actually still be in this trade, believe it or not. Okay? But had you missed that, there was another opportunity to enter here, then another one here, and another one here. All clear, easy wins. How easy would it be to manage a trade that looks like that going in your favor? Just huge. Okay? This is straightforward technical analysis. There isn't anything more to it than that. Okay? Straightforward technical analysis. So any time frame, you can switch to an hourly. Okay? You can switch to 15 minutes. Whatever you want. The same rules apply. Okay? The exact same rules apply. You don't change the settings on anything. The exact same rules apply. You just look for the same patterns. Okay? Exactly the same patterns. Here is the Aussie. Actually, let me go back to the daily time frame here. Here's the Aussie Australian dollar Czech krona. Okay? Sustained trend, what happens, you get multiple entries. Okay? Tend to move in your favor right away. Here's one on the short side. All right? Beautiful setup. Here's the New Zealand US pair. Again, same thing. Boom, boom. It's very clear. So I know we're tight on time and there's a bunch of questions. And I want to give you the opportunity to throw out a few symbols. Great. I think our hosts are going to give us an extra 5 minutes. That's great. Thank you very much. I'm actually going to bring on our coaching coordinator, Raul, to help me out because I see so many questions going by. It's hard for me to keep track. So this would be a great time for you to enter a symbol if you want me to pull up a chart and show you how it would have how it would have worked with this. Raul, can you help me out? I'll manage my charting platform while you read out a few questions on some symbols.
Would love to, Vince. Thanks
Great.
for having me be a part of this. This is a popular one. I want to know about this one because the earnings are coming out tonight for Netflix.
Oh, Netflix, sure. Yeah, Netflix is is a stock so many people trade. And it is very, very volatile, okay, very volatile. So here's a nice, easy one that happened recently, okay, on Netflix. And remember, it's not an inexpensive stock. It's actually a very expensive stock, but with options can be extremely profitable. So here we had this very, very strong move lower, okay, very strong momentum to the downside after this this negative earnings report the last time around. And so based on that, what are we looking for? We're looking for either sideways consolidation or a retracement and then that reversal signal, okay? And there were many. There was one right here. Let me show you. Okay, there was one here. Okay, now if at this point you didn't consider the downward slope of the moving average significant enough, you could have waited, and typically you get another opportunity. Now there was one here. Okay, all right, one there. Now, it only lasted one bar. Unfortunately, in this example, remember they're not all going to be winners, but from here, I want to show you this one only because of how significant it is. When you have a stock that's that expensive and you're trading options, and it moves, you know, from around the 325 area where you would have gotten in, okay, down to 315, that was a $10 move in one day. You could easily take some profits there and move your stop down. I see a number of questions on trailing stops. I will talk a bit more about exits in a little while. Let me run through some examples. Okay, here was one example here that actually was a negated trade. This is another perfect example. Okay, here's that bearish engulfing setup, but it trades above the high first. Okay, even though it would have worked out, this rule is meant to save you a lot of money over the year. Trust me on that. Here is a nice setup to the long side that actually worked out very well. Okay, so here you would have gone in around 425. It went as high as 475. A nice $50 move in a couple of weeks. Very, very easy. What else?
That was from Mike.
Great, thanks, Mike.
Vernon wants to know about Home Depot.
Home Depot, sure. Okay, I mean, beautiful chart, right? That's exactly what you want to see. You want to see a move like that, and then you want to wait for a pullback. And there's a clear entry right here. Right here. You can see that on this bar here, I'm not sure, well, that was on earnings, I guess. Significant move lower, but then made up all its losses. But the point is here, regardless of how significant the retracement is, what you want to keep an eye on is the slope of that 20 moving average. If that slope higher remains intact, then this is a valid setup. So again, what are you looking for? A trade just above the high to get you in. Stop would go just below the low of the bar in your initial stop, and then there's ways to trail it. But you can see what happened right after it triggered. Okay. A bit of a pullback there, but very, very strong move to the upside. Okay, can we do one more, and then I'll just...
Sure, we'll do one for our Forex friends. Most popular pair, you know what it is? U.S. dollar Swiss franc.
U.S. dollar Swiss. Ooh, okay, U.S. dollar Swiss. A lot of people, unfortunately, got hurt real bad with the Swiss. But here...
I don't think I've seen a red line like that in quite some time.
No, I mean, that was about, I think it was 1,500 pips that devastated a number of people. But this is the kind, aside from this one move, this is exactly the kind of chart you're looking for. Okay, nice slow grind higher, nice momentum and slope in your favor, and then you're looking for those engulfing patterns. Sorry, got the wrong tool there. Let me just draw this out for you. So there's one here that would have worked out beautifully. Okay, and you know, yeah, you know, here there'd really be no reason to sell at this point, but we do trail our stops. I'll show you exactly how. And there were other opportunities here. There was one in here. Okay. So, but the key here is, number one, most of the trades that don't work out are not even losses because they're disqualified. And number two, the majority of the trades that actually trigger tend to move in your favor immediately, which is great. Okay. So let me just wrap things up with my presentation, and then we'll answer some more questions, and if we have time, I'll go through as many symbols as I can. Okay, let me just bring back my my slides here. Give me 1 second to bring this back. Oops. Okay, so just want to recap what I've shown you here today. So what you've seen is a system that will work on any market, stock, options, futures, Forex, globally, any time frame, and any price level. You've seen the $300 stocks, you've seen the $30 stocks. We've used this on $3 stocks. Okay? Very easy to spot the setup on the chart. Again, powerful enough to be used as a standalone trading system, but certainly a great complement to whatever you're using right now. As you've seen, tends to move in your favor immediately. And again, the majority of trades that don't work out are not even losers. So I see a number of questions on exits and people asking what else we could add to this to make it even more powerful. I'd love to answer all that. Unfortunately, we don't have the time, but we do have a class coming up this coming Friday, actually, January 23rd, 1 p.m. Eastern. It's a 2-hour class. I'll be teaching the class myself. We typically go over the 2-hour mark because there's so much to cover. But what I will be teaching you is the full system from entry to exits. I'm going to actually include 5 different exit strategies, but the one main one that myself and the other traders here use consistently. I'm also going to show you a very unique way of adding support and resistance to really increase the accuracy of the system. And I'm sure you've seen how accurate it already is, but when I show you the support and resistance method that you can use with this, you'll see just how powerful this can be. I'm also going to teach you about 2 Fibonacci tools that will help you not only with the entries, but also the exits, okay? And as a bonus, I'm going to teach you 4 additional setups that you can use with this. In other words, when you get to that point where you're looking for that reversal signal, rather than just looking for the engulfing pattern, I'm going to show you 4 other setups that can be used at that spot. So this will keep you very active in the markets, and I saw many of you are already extremely active, okay? A real nice benefit of the class is that we spend part of the class doing a real-time scan for trades coming up that week. Okay? I will share my watch list with you. I'll show you exactly how I do my scan, and together we will scan for new trades and hopefully walk away with some great trades. The link to sign up for the class is tradingwins.com/pattern, and this is exactly what you're going to get once you sign up. You don't even have to wait till Friday. About 30 minutes after you sign up, you're going to get a recording of the previous pro class we did. It was almost 3 hours in length, so you can start using this right away. Regardless of that recording, we're going to save you a seat at the live class on Friday, and we're going to throw in a 30-day membership to our pro service. For those of you not aware, our pro service includes videos we send out nightly recapping what happened in the markets that day, where we think things are going. We review our open positions, and we highlight new trade ideas, not just from this system, but from all our systems. And we have a few that we haven't even released to the public yet. Altogether, a value of $691, but for anyone on the webinar today, it's just $97, okay? Again, the link is tradingwins.com/pattern, and we do have to limit it to 25 people, unfortunately, because of the number of questions. The link is actually in your chat. We've posted it there, tradingwins.com/pattern, so you can get to it directly from there. The class on Friday will be recorded, so if that date and time doesn't work for you, again, you're going to receive a recording of the pro class about 30 minutes after you sign up, and you will also receive the recording of Friday's class, so that you'll get the trade ideas that we walk away with from that class in that recording, okay? So, Raul, if we have time for any questions.
We've got 3 minutes.
Okay.
I've got questions enough for 3 hours. So I'm trying to go through as many as I can quickly.
I know.
How much of the discussion, this is from Mark, how much of the discussion on the Friday class will be on options?
Options, I will show you exactly how I would trade this with options. In other words, I'll tell you what kind of expiry you should look at, what kind of delta you should look at, tell you when to use a credit spread versus a long call or put, that sort of thing. So plenty of information on options.
I want to say thanks to Len, Mark, Claire, Dennis, Mike, Nee, George, and Bill for signing up.
Great, thank you.
Thank you so much. We're looking forward to seeing you then. When you do get an email from us that says, please confirm your email, please do so that we can start sending you your videos.
Yes, very important.
Jory says, thanks so much for a very clear webinar. How much do you discuss exits in the Pro class?
Oh, we covered them extensively. Again, I will go through this methodically from start to finish and show you how to really improve this with support, resistance, Fibonacci's. But the exits, again, I'm going to cover 5 different exit strategies that you can use with this, and we're going to spend the bulk of the time on the one method that myself and the other traders here use most often. Okay.
Most popular question today is, does it work on smaller time frames?
Yes, again, it works on all time frames, all markets. And I see also someone is asking about the time again. It is 1 p.m. This coming Friday, Jan 23rd, 1 to 3 p.m. Typically goes a little longer because our goal for this class is to answer all your questions. We want you to be so familiar with this you're able to walk away and trade it like a pro. Okay, so that's why we limit it to 25 people so that we can get to all the questions.
I mean, there's a lot of great speakers coming up. It's not that we're saying this 25-person limit is because we want you to buy now, but we do have that limit for the reasons that you just
mentioned. And that's why we've reduced the price as much as we have. It's not that we don't want you to try anything else that's offered today, but you know, we've gone through this class so many times, and one thing we consistently hear back is just from the trades alone that we find during the class, you know, we're able to more than make up the cost of this many times over. It's a great class. We also cover a lot of different aspects of technical analysis and options. You're really getting several classes in one here. It's really, really worth your while. I really hope you can join us.
2 quick questions. One of our members is asking, Jerry's asking, can we retake this class for free? As long as you're an active member, yes, you can absolutely take
absolutely. We welcome you anytime.
For free, as long as there's room.
Yep.
And the last question is, what happens to the 30-day membership, the free membership?
Oh, if you enjoy the membership, you do nothing. It will automatically renew monthly at $97. If for whatever reason you're not happy, just give us a call and we'll cancel that.
Last point. What's the best reason to attend this class on Friday?
You know what? We've seen so much volatility recently in the markets. It's been crazy, but this has been so consistent over the years. This will serve you so well for the years to come. If you really want to start and have a very successful 2015 trading-wise, I really encourage you to take this class. It's a simple, straightforward method that is time-tested, and I really hope you take advantage of it.
It's always a great presentation. I've attended the free classes, the pro classes. Folks, if you haven't attended one of Vince's sessions, I definitely recommend it. You can see that he's a very conservative trader, and he likes to explain things. He's really a teacher at heart. So if you'd like to attend, it's tradingwins.com/pattern. You can call us also at 1-888-574-2426, or send us an email at info@tradingwins.com. And we're also on live chat as well. Vince, I'll let you hand it back to the producers.
Yeah, great.
I just want to say a quick thanks to Reed and the rest of the group at Investor Inspiration for having us on today. Always a pleasure.
Right, that's exactly what I want to do. I want to thank Reed and everyone else at Investor Inspiration and all of you for attending, for taking the time out to be with us today. Thank you so much. I really hope to see you on the class on Friday. And with that, Reed, I will pass it back to you.